Hey everyone, welcome back to Corporate Decoder. Today we're diving into Cognizant Technology Solutions' latest proxy statement. It's like their annual report card, but with a twist. You get to vote on who gets to be on the board. Let's see what's cooking at this tech giant and whether the numbers suggest smooth sailing or rough waters ahead. Scroll Proxy Ketzman Guide Scroll. This document's like a roadmap for shareholders. It tells you who the nominees for the board of directors are, how much executives are paid, and lets you weigh in on important company decisions. The chairman starts off with a letter highlighting that 2024 was a pivotal year. They exited with the highest quarterly year-over-year organic revenue growth rate since 2022. The focus is on growth and capturing opportunities in generative AI. Here's a quick snapshot. Most of their revenue comes from financial services and healthcare segments and from North America. They've got employees spread across the globe, but the majority are in India. Let's peek at some financials. Revenue is up a bit, reaching $19.7 billion. Diluted earnings per share also saw an increase and they expanded their operating margin. The company seems to be generating solid cash flow. Here are the key items for shareholders to vote on. Electing directors, approving executive compensation, say on pay, ratifying the appointment of their accounting firm, and a shareholder proposal. The board gives their recommendations on how to vote on each. The main event, 13 directors are up for election. The board is showcasing their qualifications from tech expertise to international business experience. They're also emphasizing diversity on the board. Next up, shareholders get to give an advisory vote on executive pay. The board is asking for your approval, highlighting that their compensation is performance-driven and aligned with shareholder interests. They show that a large portion of the CEO's and other top execs' pay is performance-based. The document emphasizes a performance-driven approach where the top dogs only get bonuses if they meet targets for company finance. Time to ratify the appointment of PricewaterhouseCoopers LLP committee is directly involved in the auditor selection and believes retaining PwC is in the best interest of the company and its shareholders. Finally, there's a shareholder proposal to consider and the board recommends voting against it. We'll see what that's about shortly. The filing discusses corporate governance, board composition, and shareholder rights. They highlight their independent board chair, annual elections, and proxy access, among other things. They explain how shareholders can nominate directors to be included in the proxy statement. There are rules on how much stock you must own and for how long to get your nominees considered. The board lists the skills and experience they look for in directors, like technology experience, talent management skills, and knowledge of regulated industries. There's a matrix showing how each director measures up. The board's qualifications matrix shows what backgrounds and specialities each board member brings. It looks like they are committed to ensuring their board members don't spread themselves too thin, which can impact their decision-making skills. Now, let's meet the nominees. Each director has a short bio highlighting their experience, qualifications, and committee assignments. The document provides an overview of the key committees of the board, such as the Audit Committee and Compensation and Human Capital Committee. Each of these board committees has specific responsibilities in overseeing the direction of the company. The document acknowledges the importance of environmental, social, and governance ESG factors. They are embedding sustainability into their business practices, supporting their people, and aiming to create sustainable value. This section lists how much stock each director and executive officer owns. It shows both directly held shares and unvested awards. Now let's talk about how the directors are compensated. They use cash and stock to attract qualified individuals. There's a discussion and analysis of the director compensation program. This table lays out the specific compensation for each non-employee director in 2024, including fees earned and stock awards. Time to decide if you think the executive compensation is justified. The document asks shareholders to give a thumbs up or down on the executive pay packages. The shareholder vote for executive compensation will provide the management team with a score to how the shareholders feel about their plan. This is where it gets juicy. The document explains the objectives of their executive compensation program, the compensation setting process, and the elements of compensation. They aim to align pay with company strategies, reward performance, and retain talent. It seems that the goals are pretty typical: pay to promote strategies that they think will be successful, tie short and long term to the plan, and find the correct people to hire. They use compensation consultants and peer group data to benchmark executive pay and make sure they're competitive. This section dives into the details of the compensation setting process. This section explains the annual cash incentive, the primary motivation tool they give their top execs. Those key features and metrics are revenue growth, adjusted operating margin, and strategic initiatives like AI development, the Synapse initiative, and promoting an inclusive workforce. These are what the people at the top are measured against. The document explains what happened with performance-based targets. 2024 ACI was paid at 13% of target. Our 2024 PSUs paid at approximately 28.1% of target. In response, beginning with the 2024-2026 PSUs, the company made adjustments to the targets to focus more on relative performance. Here's where we get into the nitty-gritty. They describe performance by award, including the ACI program and performance stock units. You can see the specific targets, performance levels, and payouts for each. One of the tables dives deep into relationship between compensation actually paid and performance. The 2024 summary compensation table is where you can see the total compensation for each of the named executive officers. It breaks down their salary, bonus, stock awards, and other compensation. Let's start by looking at CEO Ravi Kumar's comp. His total compensation was around $16.8 million. Comprised of a salary of about $1.2 million stock awards and non-equity incentive plan compensation. Besides the usual stuff, the executives get standard benefits like medical and retirement plans. Some may also get a few perks, but the company aims to keep those to a minimum. The document outlines company policies impacting compensation, such as stock ownership guidelines and prohibitions on hedging and pledging company stock. They've got clawback policies in place, allowing the company to recover compensation from executives in certain situations, like if there's an accounting restatement or misconduct. The key goal for the company is ethics. The board seems very serious about building an ethical workplace environment. And now we get to the shareholder proposal that the board recommends voting against. It's about the right for shareholders to call special meetings. The board argues that the current rules are already balanced, protecting the company from misuse of the special meeting right. They think eliminating the 1-year holding requirement could lead to disruptions by short-term investors. The audit committee is responsible for the appointment, compensation, retention, and oversight of the independent accounting firm. This section lays out all the important information for how to vote. As usual, there are some forward-looking statements and discussions of non-GAAP financial measures. Remember that these are estimates and not guarantees, and non-GAAP measures should be taken with a grain of salt. And finally, the document provides links to key resources, like the Board of Directors page, committee charters, and corporate governance documents. Alright, let's take a step back. Cognizant seems to be betting big on AI. Their recent efforts focused on strengthening their talent pool and making strategic acquisitions to boost their capabilities. The board is focused on maintaining good governance practices and engaging with shareholders, which is always a positive sign. However, the company does acknowledge macroeconomic headwinds, and there were some performance-related payouts that didn't quite hit target. This reflects a challenging economic environment the company and industry is facing. One thing to note is there's reliance on non-GAAP measure, so it is crucial to look at the GAAP numbers, which are the ones that are real. Overall, Cognizant seems to be navigating a tricky environment while making necessary investments for future growth. Whether they'll succeed depends on their execution and the ever-changing landscape of the tech industry. Thanks for watching. If you found this breakdown helpful, please like, comment, and subscribe for more corporate deep dives.